Good morning. Welcome to another episode of the Mizuho Week Ahead. I'm Boon Heng, market economist at Mizuho Bank. This week's theme is electing winners. Last week has shown that electing winners is far from easy, and calls are almost too close to be made in reality, and even calls on tech was called into doubt as US equities plunged on earnings, but reversed even on a dismal N&P print. Last Friday, US N&P print was utterly dismal, with only 12k of jobs added for the month of October. Despite the poor N&P print, USD proofs were not the winner, as the initial sharp plunge, 12 basis points on the 2-year, in USD yields was favored by markets as USD yield curve bear steepened. Admittedly, some elements of the report justified some of the reversal, as hiring was affected by 2 hurricanes as well as the Boeing strike. Nonetheless, a downward revision of 112k for the prior 2 months ought to also signal caution. The pound had a reversal of fortunes from an early week outperformance to become losses among G10 peers, as it tumbled alongside the glitz sell-off. Specifically, expected fiscal caution in the UK budget turned into fears on outsized borrowing and fiscal-led inflation upside risks. Meanwhile, the euro led gains as both GDP and CPI prints surprised on the upside and questioned whether the eurozone paled in comparison to US exceptionalism. That said, these bilateral comparisons also necessitate a positioning perspective, as markets had earlier in the week still held outsized bets of 41% odds over 50 basis point cuts by the ECB, and those were at risk of being trimmed anyway. On that note, a trimming of betting odds for Trump's lead over Harris at the elections this week sent Trump trades weaker as crypto prices fell at the end of last week. Looking ahead, while US elections remain the headline event for this week, FOMC decision in the middle of the week is also a reminder that monetary policy will still be the key driver after the initial political reactions fade. The Fed remains on course for another widely expected 25 basis point cut this week. Down under, the RBA will stand pat tomorrow as underlying inflation remains stubborn, as reflected by a much smaller trade-mean disinflation. Nonetheless, Aussie bulls are hardly winning despite the RBA's rate hold, as deference to higher USD yields and caution over China's stimulus weighed. Similarly, in Malaysia, the Bank Negara Malaysia will keep rates unchanged at 3% as inflation remains managed and growth resilient. In turn, the spotlight is on fiscal reforms, but that alone may not make the ringgit a clear winner should China's FPC disappoint and/or US elections threaten the CNH. In the same vein, our expectations for resilient Q3 growth in Indonesia to stay at around 5% on supportive consumption and investments is hardly a boost for the rupiah amid a dull commodity outlook. Meanwhile, Q3 growth in the Philippines looks to moderate to a still healthy 5.9% from Q2's 6.3%. The risk lies in a more skewed growth as domestic consumption weakens and external demand firms. All in, voting may be straightforward, but declaring a victory is far from easy, especially if a photo finish becomes contested in an AI era. For more information on the events this week, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you.